Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis. Well, what do we have today? Is ultra low volatility, unfortunately. Well, we do not have influence on that. It's caused by Easter holidays. Stock exchanges are closed. Most of the stock exchanges are closed. Trading on commodities as well. So we shouldn't be surprised that trading on the forex market, on the currencies, is a bit muted right now as well. But it's not like that nobody's working. We are working, but also we will have data being published, retail sales, important data for a majority of currency traders, and also CPI also should be very influential. The thing with lower volatility, it's tricky because this lower volatility is caused by lower liquidity, right? So there's less traders on the market, there is less money on the market. But for example, if something would happen, like, I don't know, United States would attack North Korea, with the lower liquidity, movements after this would be exaggerated, and the volatility would be actually much higher than it would be with bigger liquidity, right? So sometimes it's like that, usually when there's low liquidity, markets are muted, like for example today for the first half of the day. But very often, if something happens, if something important happens, the movements are actually bigger, higher, more significant than when there is full liquidity. So we'll see. Hopefully, nothing important won't happen during Easter holidays during today, and we will be able to come back to trading on the same levels as we finished on Thursday or on Friday, depending from the instrument. So on the calendar, what do we have is retail sales and CPI. As it is Friday, let me show you the data for the next week, but obviously we'll use only the most important figures. And as you can see, on Monday, GDP from China. On Tuesday, meeting minutes from Royal Bank of Australia. And on Thursday, CPI from New Zealand. So as you can see, next week will be empty in terms of the data. Maybe let's check also a bit less relevant numbers. So on Monday, still most of the European countries have Easter holidays, so many markets will be still closed. So only data from China and a bit from UK, but nothing relevant, nothing significant. What do we have on Tuesday is just data from United States. On Wednesday we do have CPI from Eurozone and a trade balance, which will be important obviously. On Thursday there's CPI from New Zealand, a pack of data from Japan, and actually that's it. And on Friday PMIs from different economies, Eurozone, Germany, United States, and also we do have CPI from Canada. So fundamentally, not much in terms of the macro data, but obviously we should get some nice movements from the geopolitical side of the market, right? We should see development of the situation with North Korea, between Russia and United States. We should see some interesting news, most probably from Syria. So it will all influence the markets. Now, let me show you what's going on the charts. Not much, actually. Everything what happened, what was important, happened yesterday, and we didn't get any major changes on the charts. Only interesting things happened on indexes and on oil, but I will show you that at the end of this webinar, because Thursday ended with significant downswings. Maybe they don't change the situation in the long term or mid term, but they change the situation in the short term, most definitely. So we will start with American dollar to Swiss franc, where unfortunately we're in the middle of the daily changes from yesterday. Daily changes for change for today. You can see this candle, 17 pips. It's very low. So the situation here does not change. We do have an ascending triangle formation. Here is a resistance of this formation. Here is a support. Most recent formation is the flag. A flag is a trend continuation pattern. A flag was created by an upswing, so it promotes an upswing as well. We got a bounce from the upper line of the flag, but big chances that we will have a breakout of this upper line of the flag and a continuation of this upswing, aiming this horizontal resistance here. Next instrument I have for you is silver. Silver is not traded today. The market is closed, but yesterday ended with optimism. So what do we have on silver is inverse head and shoulder formation, left shoulder head and right shoulder. This horizontal resistance can be considered as a neckline of this formation. As you can see on hourly chart, we did not get any bearish reaction here. Maybe this one, but it wasn't significant because straight after that it could retrace. So in my opinion, what happened is that price broke this resistance. Actually, if we will look in a shorter term, that's a resistance. Okay, it's much thinner. It could we got a breakout and we got a defense of this resistance as close as support, but that's a shorter term. In the longer term, this resistance looks like that. It's a bit wider, so we cannot say that we got a definite breakout, but we have an optimism here. It's also supported by this line. This line was the resistance connecting recent lower highs, recent important lower high starting in July. We got a breakout of this upper line of this trend line, and then it was used as a support. So that's one of the most important principles of the price action trading, which actually happens. So here the real intentions of the traders were shown, and those intentions are definitely bullish. So we got a reaction on this trend line and a further upswing, which should we see next week and a week after that, because breaking a breakout of this neckline will create a long-term buy signal. Well, it was already created here, but here it will gain even more certainty if you can have certainty on the market at all. But if you do, you will definitely have more after the breakout of this neckline. Euro to Japanese yen is especially interesting for us because we are analyzing this instrument for a long time. So what's happening to on this instrument is a strong downtrend, which started, well, started earlier, but here we got a deeper correction, and the price is declining from June 2015. And then the price created a flag formation. Flag is a trend continuation pattern. Trend is negative. We got a breakout of the lower line of the flag, and as you can see, almost, yes, not almost, but with every day, the price was making lower lows, lower low, lower low, lower low, lower low, right? What is significant here is that the price broke this support. But I would like to also show you short-term situation that above on the lower line of the flag we had this support, which is a support of descending triangle formation. This is a resistance of this formation, and it showed us that the pressure on this level is rising, and the willingness for breakout is getting more serious and serious. And we were observing this instrument there, and we were saying that a sell stop order below this support looks like a decent idea, and it was a decent idea. Even if you place that here, you already could have 160 pips, which would be a very good trade. So we broke this this horizontal support. We broke this horizontal support. The price is declining heavily, so I wouldn't be surprised if we would get a bullish correction here. Potential first target for this formation is here. Second one is here. So what we're having here is a potential of 300 pips, or even lower, 460 pips. But, well, entering now, fair enough if you will have a wide stop loss. If you don't want to have a wide stop loss, that would be a bit risky, because the price declined already sharply, so the chances for a bullish correction increases. Okay, the next instrument I would like to show you is American dollar to Polish zloty, where I am waiting for the same impulse here, 4,500 pips, but they stopped on a trend line. Okay, fair enough, they stopped on a trend line, so most probably we will have to stay with 3,800 pips instead of 4,500. But they bounced from the trend line. We are in a flag. Situation a bit similar to this on American dollar to Swiss franc. We are in but this is not an ascending triangle, but a channel up formation. We are in a channel up formation which promotes an upswing. We bounce from the trend line, which promotes an upswing. We are in a flag which promotes an upswing because it happened after the upswing, so the upswing should be continued. So we have many bullish factors here. So to be fair, you have to see an upswing here because you have many factors supporting this side. You shouldn't argue with this kind of price action, right? At least I don't see any potential negative scenarios here. Maybe you do. Well, I do not. Here everything looks positive. Euro to American dollar. If you'd compare that with our previous analysis, we removed a few horizontal supports. Why is that? Because they are not relevant anymore. There is two left, one horizontal resistance and one dynamic support here, right? Rest of them, like I would like to show you here, for example, this one is no longer relevant. It was, but after the breakout and a comeback here, it is not. So we have only a few left. As always, well, maybe not as always, but as usual, trading on euro dollar is not fascinating. In my opinion, there are much more interesting instruments on the market with better technical situations than this one. British pound to Canadian dollar. This is a bullish engulfing on a weekly chart. Here, sideways trend. Breakout from the sideways trend. Here. And a trend continuation pattern, which is a wedge. What I'm seeing here is a potential for an upswing. Also supported by this inverse head and shoulder formation, but it's not the prettiest one. But a breakout of this black line will be definitely a buy signal. Well, the buy signal is already present here because of this bearish, this bullish engulfing that I showed you before. But once if the price will get there, the signal would get much stronger. Australian dollar to New Zealand dollar. Also, what do we have here? Is an inverse head and shoulder formation. You know that there is a deeper correction. We had a position there, but we do not have it anymore. It was closed on break-even point. So we earned like $80 and that. We entered here, we placed break-even point here and it got activated overnight. But sentiment here stays bullish as long as we stay above this horizontal support marked with purple color. As long as we stay above that, the sentiment is positive. That's a neckline of this inverse head and shoulder formation, and it should be a strong support. It was defended many times. Probably now the price will try something else. But if you are a seller, sell stop order here, it's not a bad idea at all. Even if you're a buyer, you have to know when to abandon your view, when to abandon your position, right? You have to know that. If you want to be a good trader, you need to know when your view is no longer relevant. That's what makes you a good trader, that you don't think that you're infallible or you don't think that you're always right, but sometimes you can get it wrong. And the thing is that it's normal to be wrong on this market. It's nothing bad. It's bad when you lose a lot of money on it, but if you're having good money management rules, money management skills, even if you're wrong, you're not losing a lot of money. And that should be the main principle of trading. I showed you silver, now I have to show you gold. Well, I don't have to, but I want to because I like this instrument. I like how the price is behaving on gold. So what we are having here is was this channel up formation. We finally broke the horizontal resistance here. And after the breakout of this horizontal resistance, we aimed for long-term trend line. This line connecting very important lower highs here. So after the breakout of this resistance, the sentiment is full positive. Full positive sentiment. The next resistance is $1,305 per ounce, and we should get there maybe next week, maybe in 2 weeks. But in general, the sentiment is positive, and the price should get there anytime soon. Here, we will have to wait and see approach. We would have to be patient and see what's gonna happen, right? Because we can have a major, very strong bearish bounce, but we can have an easy breakout. That's what price action do. Price action is not trying to predict the future, but tells you what happened here, and as long as the price is not here, I won't tell you what will happen, because it's just, you can ask a wizard or someone. He will tell you. I will tell you what will happen when I will see signals from price action. So far, I do not have signals from price action because the price didn't touch this level. I know that this resistance was broken, which makes a buy signal, and the movement for $20 here is very probable. British pound to American dollar, we broke this wedge inside the symmetric triangle. The price aimed upper line of this symmetric triangle and bounced. So this creates a nice selling opportunity, because we have a downtrend. The symmetric triangle can be a reversal pattern, can be also a continuation pattern. And this way, it looks like it will be a continuation pattern, at least for now. Well, in my opinion, in the long term, I'm bullish on cable, so I think that the price should go higher, but probably not now. Probably now we'll have a bounce from this resistance and a breakout of the upper line of this triangle. Here is Australian dollar to American dollar, where we got a breakout of this horizontal support here. But as it seems, it's a false breakout. We labeled this as with a blue color. It looks like a false breakout, and this upswing is supported by two factors. It is supported by fundamentals, so Donald Trump saying that American dollar is too strong, so we get an upswing here. And also the second factor is the false breakout itself, right? So traders who were opening short positions here had their stop losses here, and those stop losses were long positions, and they got activated, which increased the momentum, and now we're having a beautiful upswing. You know how it works after the webinar about price action, which we had on Tuesday, right? So it is very, very probable that in the next week or so we should get an upswing to this long-term horizontal resistance, which is very, very important, as you can see here. Next instrument I have for you is euro to Australian dollar, where we're having a long-term downtrend, right? We had a nice upswing. We even traded that and managed to make money on this. But it looks like those lows will be tested one more time. In the long term, we do have lower highs and lower lows. We do have a flag formation, which is a trend continuation pattern. We broke the lower line of this flag, and at the same time we do have a head and shoulder formation, left shoulder, head and right shoulder, and the blue line is the neckline of this formation. And look at the price action. The price is not bouncing from this line as here. One contact and a bounce. The price is waiting for a breakout. It looks like traders are just getting ready for a breakout of this support. Maybe it won't happen today. Maybe it will happen on Tuesday. But chances that it will happen are very, very high. Right? I will show you this. This kind of price pattern indicates that most probably we'll have a bearish breakout of those two lines, lower line of the flag and a neckline. Especially that we already got a sell signal here when the lower line of the flag was broken, of the bigger flag, right? We have a very small flag and a long-term flag. Euro to British pound is approaching a crucial support created by crossing of the uptrend line and the lower line of the symmetric triangle. So far, I don't know what's gonna happen, but I want to be there when it will happen. So, two scenarios. Bullish reversal pattern here, then I will go long here, and a bearish breakout here where I will go short. Simple as that. Price action is at finest. You just wait for the price for the price to show you the direction. Even if I will have to wait the price will touch it and bounce here. Even if I will have to lose like 40 pips, I wouldn't mind, because after this I would be able to gain like 200. Good risk to reward ratio. And even if you're a bear, I wouldn't open now. I would open somewhere here. So I'm losing 800 pips. But even with that, when you will open somewhere here, the potential movement goes, for example, here, 800 pips. 10 to 1 in terms of the risk to reward ratio, which is an excellent score. American dollar, New Zealand dollar to American dollar, what we get here is a bounce from the lower line of the flag formation and also from the horizontal support here. So it is a good sign for buyers. It looks like the price will continue an upswing, at least to this red line connecting recent lower highs. Now, as I said, let's switch to the indexes and to oil. First, oil, where yesterday we get bearish engulfing on a daily chart. Traders did not follow that. Well, not yesterday, but 2 days ago, traders did not follow that strongly here, but at the end of the day, they managed to push the price lower. And on hourly chart, as you can see, we have a familiar pattern. It is head and shoulder formation. So we can have a deeper decline once this support will be broken. Also, that's a trend line. Okay, let me change the color. So price getting here will be a sell signal. Okay. Sell signal with a potential target of this support, and maybe after bounce from the support we should see an upswing. S&P 500 finished yesterday with a drop. They broke the support, they broke a trend line. They still have a last one in the midterm, because well, in the long term they have thousands of supports, right? But in the midterm they have last support here. And after we will have a breakout here, we can think about deeper correction on S&P 500. And DAX. DAX also broke a horizontal support here, which wasn't very beautiful, but as you can see in the last 2 days, it was respected, right? Support. Support on Wednesday, resistance on Thursday. It caused a further drop, bounce from the resistance caused a further drop, and the price stopped on the channel up form, lower line of the channel up formation. So as long as we stay above this line, the sentiment is positive. Once we will have a breakout of this support, that will open that will create a sell signal here. So as you can see, for the next week we do have few interesting trading occasions. We just have to be patient, like for example on euro to British pound, or here on indexes. Unfortunately, it is always like that when we have holidays that well, maybe it's not unfortunate, but it's good that instead of sitting in front of the computers, you're spending time with your family. Well, it's definitely perfect. It's definitely good. So maybe we shouldn't feel sorry for that we don't have significant trading occasions. Well, but we do. Like for example on precious metals, where there is a strong buy signal on Australian dollar to American dollar, euro to Australian dollar, etc. So we do have nice trading occasions, but for bigger movements, we will have to wait till the next week. Well, using this opportunity, I would like to wish you happy holidays, to spend them with your family, and I would like to wish you all the best. But remember that trading investment in financial markets involves an element of risk. And also now a short break, and after that we'll have a live trading session. But obviously, well, this will be our first live trading session. I will show you my system, I will show you my strategy, my results, but we won't be able to open any position as the market is flat, right? And I won't open just because I want to open. It won't happen, but I will show you my history.